Have you ever wondered how a simple misunderstanding about insurance can drain your finances? Well, let's unravel this together. Insurance is a safety net for your wallet, but it can turn into a sinkhole if you're not careful. This video will shine a light on 10 practical tips to steer clear of common insurance pitfalls. From understanding your coverage to considering life changes, we've got you covered. So, stay tuned to discover how to shield your finances from common insurance mistakes. Tip 1. Always understand your coverage. Imagine, you're John, a proud homeowner. A nasty storm hits, causing significant damage to your roof. You're confident your homeowner's insurance will cover it, only to discover you're not covered for act of God damage. Devastating, isn't it? This is why understanding your insurance policy, its terms and conditions, is crucial. It prevents unexpected out-of-pocket expenses and gives you peace of mind. So always make sure you fully understand what your policy covers. Tip 2. Never underinsure. Imagine owning a house, your most valued asset, and a disaster strikes, wiping it out. You're confident because you're insured, right? But then comes the shocker. Your insurance only covers half the cost of rebuilding your dream home. That's the harsh reality of underinsurance. It's like buying an umbrella that only covers your head while the rest of you gets soaked. To avoid underinsuring, always evaluate the value of what you're insuring. Tip 3. Regularly review your policies. It's easy to forget about your insurance policy once it's in place, but let's think about Sam. Sam locked in his auto insurance policy 5 years ago, and quite frankly, forgot about it. Meanwhile, his provider introduced lower premiums for safe drivers, but Sam missed out because he didn't review his policy. Don't be like Sam. Regularly reviewing your policies can save you money and ensure you're adequately covered. Remember, insurance needs change over time, so regular reviews are a must. Tip 4. Never lie on your application. Picture this. John, a smoker, claims to be a non-smoker on his health insurance application. When he falls sick, his claim is denied because the insurer discovers he lied. The aftermath? Huge medical bills that drain his savings. Insurance companies are like detectives. They'll find out the truth. Lying can lead to claim denial or even policy cancellation. Remember, your insurance is there to protect you, but it can only do so with the truth. Honesty is always the best policy when it comes to insurance. Tip 5. Always utilize discounts and bundle your policies. Picture this. A friend of ours, James, could save a hefty amount each year by bundling his home and auto insurance with the same provider. And let's not forget about discounts. Many insurance companies offer discounts for things like having a clean driving record or installing a security system in your home. James took advantage of these too, and guess what? His wallet thanked him. So don't miss out on potential savings by overlooking discounts and bundling opportunities. Tip 6. Avoid making small claims. When it comes to insurance, every claim counts. Let's imagine John. He made several small claims in quick succession for minor damages. Soon, he found his premiums skyrocketing. Why? Each claim, no matter how small, represents a risk to the insurer. The more claims made, the higher perceived risk, leading to increased premiums. So, bear in mind, insurance isn't a maintenance contract. Remember, insurance is for large, unaffordable losses, not small, manageable ones. Tip 7. Never let your policy lapse. Let's imagine John, who missed 2 premium payments and his policy lapsed. Unfortunately, during this lapse, a fire damaged his apartment. Because his policy was not active, he had to bear the financial burden of the damages out of pocket. A lapsed policy means no coverage. It's a risk not worth taking. So, remember, insurance is your financial safety net. Don't let it disappear. So, always pay your premiums on time to maintain continuous coverage. Tip 8. Choose the right deductible. Imagine this. You've got a solid insurance plan, but when it's time to make a claim, you're stuck. Why? The deductible, the amount you pay out of pocket before your insurance kicks in, is too high. This is a common trap many fall into. The key is to select a deductible that doesn't leave you high and dry when you need your insurance the most. Remember, a deductible should be an amount you can comfortably afford in the event of a claim. Tip 9. Always consider life changes. Imagine this. John, a successful entrepreneur, didn't update his policy after his twins were born. Unfortunately, an unexpected event left his family in a financial bind. John's story is a stark reminder that life is full of surprises. Major events like a new family member, buying a house, or even a career change can drastically alter your insurance needs. Don't be like John. So, Always update your policy to reflect your current life circumstances. Tip 10. Don't rely on basic policies. It's like bringing a knife to a gunfight. Imagine Jane. She had a basic home insurance policy and thought she was covered. Then a flood hit, and she found out her policy didn't cover water damage. She was left facing a hefty repair bill. This could be you if you lean heavily on basic policies. They may not provide the shield you need against financial pitfalls. Remember, it's worth investing in comprehensive coverage to protect your finances. In conclusion, avoiding insurance mistakes can save you significant financial hardship. It's all about understanding your coverage, not underselling your needs, and keeping your policies under regular review. Honesty on applications, making use of discounts, and avoiding small claims can be game changers. Remember, never let your policy lapse. Choose the right deductible, and always consider life changes. Basic policies, they're just the start. Thank you for watching. If you found these tips helpful, please like, comment, and subscribe to Money Talks. Stay tuned for more financial advice. Remember, your financial health matters.